It's extremely well known and documented that novice investors and bad investors especially have a tendency to get carried away by the general mood. And this is particularly serious when the general mood is in panic, because when people are in panic, most of their brain, what you call the neocortex, which is the smart part of the brain, almost shuts down, and the only part of the brain that really works when you are in panic is something called amygdala, which is about the size of an almond and has an intelligence a little bit less than a newborn cat. So you need to think when you can, and you need to know how not to get carried away. So there are a couple of techniques for that. The first one, in my opinion, is that you have to be aware of the idea of contrary investing and contrary opinion. That if the large majority of players in the market are bullish and are buying, then who's selling to them? So it must be very few people who are selling enormous amounts, because most people are buying. So who are those very big people? These are the very, very big hedge fund managers and the very big university endowments and so on. So you are trading against the smartest investors in the world. So the mere fact that everybody seems to think the same means that you should, as an instinct, think the opposite. The second one is, which I use a lot, is when the markets are calm, you are not worried, you have the whole brain at your disposal. Take some charts, put in some levels for all the markets you're interested in, and say, if it comes to that point, I need to sell. If it comes to that point, I need to buy. This can be whether you are a value investor or you are technical investor. You can still do it, because when it does come to those parts, there's a risk that you are irrational. So you should predefine that when you are calm and when the markets are calm. If you would like more ideas about how to become a better investor, I suggest you buy my book, The Psychology of Finance.